Hey guys, it's Andrew here. So I'm going to go through the top dividend stocks for the long term so you could generate some cash flow. But first, we have to talk about why investing, especially for a dividend, is not such a good idea. I get so much heat for saying dividend investing is a bad idea, especially in a previous video I made, but I'm here to discuss it again. I think I've learned a lot since that previous video. All right, let's go. So after a lot of thinking, I do now get the appeal. Many people are working to build up passive cash flow in order to cover living costs, to potentially retire early, and then focus on making bigger amounts of money. I see this appeal and I get it. And if you hate what you do and dream of stopping work so you can be free, there isn't much more passive than public equities that pay you a dividend. Well, if you want cash flow. See, when a dividend is paid, you will get hit with about 30% of it as tax. It would be far better for the company to reinvest that dividend, to grow the company, and let the business compound this money inside the business for you tax-free. But I get it. Not all the managers are great and they can destroy your money as well. So maybe taking the 30% fee and then being able to choose where the money gets invested gives you more control. So the ideal scenario would be one, to have a great management team that won't destroy your capital, so the money can compound inside tax-free. And if the management doesn't have a good way to spend your money, then giving it to you is actually all right. It's tax inefficient, but it's all right. Now, maybe a portfolio that has some strong dividend payers in it, some mature companies that don't have any growth opportunities, and the management team are wise enough to know that they would be wasting money if they tried to grow, so handing it out to the owners is the best thing to do. This business is not the business I would invest in because I try to invest in businesses that have lots of areas to invest their money and good managers getting good returns on equity. But I have been digging around and have uncovered some investments that I think have good growth prospects, plus make so much cash that they also pay a healthy, reliable, growing dividend. So here in this video are those findings. Now, I'll probably say this list and the companies will hit some tough times and stop the dividend. But anyway, without some black swan event rocking the cart here are my top dividend stocks that I think are solid. So first is CF Industries. It's a fertilizer business that I think Phil Town has invested in. Phosphorus is actually an interesting commodity as I think Morocco has most of the world's reserves and it's a critical ingredient. Anyway, a lot of research needed here, but I have a feeling it has a strong competitive advantage and it's a really good company. The dividend has grown over the past 10 years at 20% per annum. Although the yield is small now, it is growing really nicely. Next is Broadcom, and it's a business I don't know much about. Apparently they are in the semiconductor space. Not sure what the competitive advantage is, so I would need to figure that one out. But I think it's worth a closer look considering the strong numbers and strong history. First, cash from operations has been growing at over 30% per annum and revenues at a solid 15% per annum over the past 5 years. But what is more impressive for the dividend lovers out there is the 10-year 43% compound annual growth rate of the dividend. Now that is the highest dividend compound annual growth rate on this list, and at only 16 times price to free cash flow right now, it's not overpriced from that metric. But it might be way overpriced if it cannot continue at these levels. I'm not sure, don't know much about the company, but financially it looks really good right now. Now this one actually is one of the stocks I already own, which I wasn't expecting to find here in my dividend research. But with strong revenue and operating cash flow growth over the past 5 years, a very strong balance sheet, and a 10-year dividend compound annual growth rate of 17% per annum, I guess this is a great dividend and long-term growth stock. I have other videos on Nintendo that you can watch if you like this one. And now if you want to see all the companies that I follow on my watch list with all my up-to-date buy prices, fair valuations, and what I think their price appreciation potential could be, well, sign up to my e-magazine called Undervalued. I release a new version on the first Wednesday of each month, and you can check out the February edition for free if you want to see what it looks like and what you can expect. The link's in the description. All right, now this is what I'm talking about. A big, juicy dividend. It is actually relatively reliable as BHP has a very diversified set of mining operations. Generally considered a well-run company too. I think miners paying out a big dividend is good as commodity prices can fluctuate all over the place. The dividend has grown at 11% per annum as well. So if that continues, well, this is the cash cow that you might want. All right, another one out of Australia here, and I just don't know why Australians are so demanding of high dividends. I think most of the retirees in Australia live off these dividends, so they tell their children that this is the way to get wealthy. I don't know. Anyway, Fortescue Metals is another diversified giant mining company, mining iron ore, copper, gold, stuff like that. Fortescue has some very impressive return on equity metrics, above 30%, and a 10-year dividend compounding your growth rate of over 40% per annum. Now, if you did want to invest in a company like this, well, you're going to need a broker that can do that and access these international markets. Interactive Brokers is what I use and highly recommend. There's a link in the description. You can also see, you can get a demo account and see whether you like it before signing up. That's what I'd recommend. Now, if you want to find some of these companies for yourself, I'm using a global screener inside of TIKR Terminal. And what I'm doing here is I've put in these filters essentially to find this great list of dividend stocks. So I've got the forward market cap to free cash flow. The reason I want this is I want it to be, I don't want to pay too much for the free cash flow. So I'm just looking at the next 12 months under 25, under a 25x valuation. That's should be reasonably priced. Total revenues, but for the last 5 years, the compounding annual growth rate to be greater than 10%. Return on equity, the value at the moment is greater than 10%. Return on capital employed the same. Current ratio, I don't want to be too heavy into debt, just because that dividend might not be, it might be at risk at getting cut if something goes wrong. So I want the current ratio to be decent. It's got to be bigger than a 1.3. It means their current assets are significantly above their current liabilities, and that's what's important for the dividend. Now, the cash from operations, I want that to be compound annual growth rate to be the last 5 years above 10% as well. It just shows it's a healthy business growing. And the dividend per share, now I've got that as the compound annual growth rate for the last 10 years at 10% per annum. So for a company to get filtered, to be able to come up in this screen, it's got to have some great metrics at a reasonable price, growing nicely, and a dividend that's been growing as well. Now, I do have one more to add that didn't show up on the screener. It's called Pine Lawn Cemetery, and it's a 7.5% dividend yield. This is an awesome little business. Well, it's not really even a business. It's more of like a royalty. See, the story goes that 100 years ago, some guy raised money to build this massive cemetery outside of New York, as all the cemeteries there were getting full. Now, the people that lent the money were given 50% of the proceeds of each plot sold until the cemetery was full. And this is paid out as a dividend or a royalty. Now, since that was like 100 years ago, the people who own them have died. And anyway, these royalties trade over the counter on the OTC. So it is pretty hard to get one of these royalties, but you should be able to accumulate a handful if you are patient. Now, apparently there is still like 50 years left of land available, so it shouldn't be an issue. But please check that out before you run out and buy any. Anyway, I really like this one because death at the moment is, for the foreseeable future, is pretty inevitable. So I think this is about the safest dividend payer I could imagine. And I saved it for last as it is probably the best. If you can get these shares cheaper than $500, well, that's pretty great. But it wasn't long ago that these were $300 a share. So that dividend was then pushing like 10%. All right, there you have it. Some interesting growing dividend payers that you might consider for those out there chasing dividends. I think a growth plus dividend strategy might actually be a pretty decent idea, as long as the growth is there and the management team prioritize that. Now, before I go, I want to say a quick thanks to Elliot. I appreciate your comments. They're always fun. You're a legend. Thanks for staying to the end of the video, and I will see you next time.